One space which is also quite active is the entire auto basket. Two-wheelers, of course, are on the reverse gear today, given the fact there was a CLSA note as well talking about how the stocks are now fairly priced. But overall, how the volume stacking up, what next is lined up in terms of the slew of launches that we have seen as well. We have Basudeb Banerjee, the auto analyst at ICICI Securities, joining us on the show. Basudeb, hi, good to have you on the show. What's the view right now? Are you in the camp which suggests that the stocks are fairly priced, especially the two-wheeler names, or there's still value on the table because the recovery in the rural markets has just started?
You have to look at it from two perspectives. Like two-wheeler markets were on a declining mode post FY19. So FY20, 21, 22, 3 consecutive years, the industry was down. 23 was the first year where there was an urban revival and industry was up some 19%. So this year also mid to high single digit growth is doable. So under that circumstance, the whole delta has been driven by the urban dependent two-wheeler business models, and that's why you can see the likes of Eicher making new highs, Bajaj Auto crossing 6,000, TVS at 1,900 plus. But on the other side, if you look at rural retails, uh, even till pre-festive season, it was nothing exciting at all. And just a couple of months of festive months can lead to a spike in volume, but the litmus test will be post-November. So as you said that rural demands have just begun, I will say yes, it has just begun, but one needs to watch out how the rural retails pan out in Jan, Feb, March to make any conclusion about recovery in rural demand. So under that background, stocks which are making new record highs, valuations are fully priced in. So it is a matter of time-based consolidation in the space after underperforming for a long period.
So a bit of time-wise consolidation is what we are witnessing. And yes, November was festive season, but December is going to be the wedding season as well, because as per reports, 38 lakh marriages were lined up with a lot of spend that is expected as well. So that point is taken. But the other trend that we witnessed in the November sales that came out this time, Basudeb, was the slowdown that we have seen in the commercial vehicles. Is this a bit of seasonality, would you say, or something that we should be more cognizant about? What's the view in commercial vehicles, and stock-wise, which are the recommendations?
So you rightly pointed out, not only wholesales, even retails in last couple of weeks, even post Diwali, for commercial vehicles have been quite subdued. And it is not at all a seasonal phenomena. In fact, seasonally, it should be doing well currently. So till September, till the rainy season, commercial vehicles are on the weaker side. Post that, it starts picking up. So post a strong October, November retails have been quite subdued, and it's not a great sign. And if this weakness in absolute retails persist even till January, definitely it's a very negative signal for the space. And in terms of recommendation, we are not positive on the whole space at all. And we believe with CV cycle having recovered back to almost fiscal 19 highs in terms of tonnage adjusted volume, we expect peaking out of the cycle by FY25. And all the CV stocks building in the FY25 fundamentals, we don't see any upside on the CV stocks as such. So in terms of recommendation, we don't have any buy recommendation from a CV business perspective as such.
Sure, that's a good view to have. At least there's that conviction and clarity that you believe that the CV cycle has peaked, and FY25 estimates might see a bit of a risk on the downside, if we can put it like that. But let's move to the passenger vehicle segment as well. We understand that the inventory still continues to be quite high. Of course, there was a build-up ahead of the festive season, but as you also pointed out, festive season was pretty much at par or a little lower than expectation. What's your view on the PV segment now? And again, stock specific, what are the calls?
Yeah, so rightly pointed out, PV industry has been adding on to the inventory quite in advance of the festive season. Sometime from July itself, it started. So we expect already in preceding few weeks and coming December and January, where retails seasonally in December are much higher, being the calendar year ending month. And you have half-yearly maintenance shutdown for key car manufacturers, and you have some Christmas holidays. So typically production in December is lower than retails. So that would be a good, I will say, opportunity for the industry to reduce the systemic inventory in December and Jan together. From a demand perspective, I will say neither it is showing any positive surprise nor any negative surprise. It is quite steady for long. And the premiumization in car, that theme is very much holding on. And now, if you see 15 lakh plus on road vehicles are doing far better than sub 8 lakh on road models. So, the players who are able to grab success in the premiumization story, for example, Mahindra coming out with successful models like Scorpio N, XUV 7.0, and Thar continue to do exceedingly well. And Maruti finally has entered the bandwagon correctly with models like Grand Vitara or a France. So also Maruti is moving up the value chain as such. So I'll say premiumization theme in cars is there to continue. And growth definitely will be mid-single digit, not expecting any double-digit growth. Neither we expect any major decline in numbers. So from a
Okay.
preferred pick perspective, we'll go with Mahindra in this space.
Okay, so Mahindra is the preferred pick. Maruti too is inching higher in the value chain. Thanks so much, Basudeb, for making time and speaking with us. So that's the latest commentary coming from the auto sector across the spectrum.